This conference will now be recorded.
Hi everyone, it's Patrick Reed from the Adamus Principle. Welcome to the show. Adam unfortunately sends his apologies. He can't make it tonight, but he'll hopefully be with us next week. But hey, who needs Adam? We got Beat in the house. How are you?
Hi Patrick, not too bad. How are you?
I'm very well. Only joking, Adam. I know you'll be watching the show. What a week. I loved this week of trading. It threw up tons of stuff for me. We're just going to get bang into it. I blogged on Friday about some of the moves, and we were just talking offline about the market and what the market wants, how it's misreading the Fed and all this stuff. And I just, I sent a little blog out on to the retail traders out there, just saying, look, just observe what the market's doing with big events and big data. And if it's not doing what it should be doing, just make a note of that. Just do your homework. And for me, last week, lots of things happened. Tuesday was interesting, and it was very painful for me trying to get long on the, buying dips in dollar. We had some kind of momentary belief of green shoots in Europe after CPI, the German regional CPI, hit it out of the park, gave it all back from one comment on CPI at the FOMC on Wednesday as being transitionary. So that's an interesting nasty candle on the dollar index, not on dollar, it's on euro dollar, excuse me. And the dollar bulls are back on. The only other thing I will mention that really kind of made me think was 0.2 higher on core CPI on Friday, on the headline 0.1 higher. Normally that would have got a move, but euro dollar didn't do anything. It was very muted. Probably priced in. Could have been overall broad strength on the dollar when it gave it all back from post FOMC. The other thing, non-farm payroll, hit it out of the park on on the headline. Unemployment 3.6, very good. Wages a touch softer at 0.1 lower. Didn't really do much. I mean, it came off. I think the low was 44s, reversed. But there were lots of dovish FOMC speakers in the afternoon, and sort of that probably helped as well. But really, I mean, where are those risk players? We can maybe talk about that as well. So that's lots to kind of talk about in the show. Just quickly, I know, Beat, you've been looking at your prices. Some tweets out of Trump. What have you got? Some more on that, mate?
Yeah, to be honest, it's so the market in Wellington opened a lot lower in dollar yen, 110.70. Aussie is down to 69.70. Aussie yen go totally plastered at 77.15 on the comments from Trump to raise tariffs from 10 to 25% on $200 billion of goods on Friday. So obviously we still have the Friday. They kept on saying the deal could be signed as early as next Friday. So whether this is his bully tactic, which it probably is, with the Chinese, you just have to be a little bit careful. They don't like to be bullied. But what the article said as well is that he starts to get frustrated about the pace of the talks. Now, we've been talking about this quite a few times, that the talks keep dragging on. They can only drag on if there are problems or sticking points. We already had that story a few days earlier about an impasse that, after the talks in Beijing, there wasn't really much given away of where they stand, which the market started to read as there is a problem. We never heard much about, Trump apparently said last week that he, on all the intellectual property stuff, that he just wants to move on it's almost like suddenly it's not an issue, but we don't know where we are. So the odds that there's a problem could be real. But we could as well get a tweet on Monday afternoon that, everything goes on course. I don't know. It's Trump. So like you said before we went on the show, there's definitely no point selling this, gap lower. It's no point selling Aussie yen 100 points below the Friday close, one little headline the other way, and it just bounces. But if the story starts to become real, then equities are far too high, and risk would have a lot of room to go, on the downside. So as you know, I'm always short a bit of risk, and so obviously not enough if this is the real deal, but it's still my core view that the trade deal, like we said many times, for me it's a buy a rumor sell the fact anyway. Now if it doesn't happen, that would be a shortcut to massive risk off. If that is really what this means, the risk it will be, because then forget these green shoots in China. They're gonna lack a little bit of watering, and they will die off rather quickly. Because if he would raise tariffs from current levels, then the other thing that has not yet, which I just remember, there's this big pork crisis they have in China, huge.
Okay.
They see it's this kind of, they call it the Ebola for porks. It's this new swine fever they have. They already culled a lot of porks. It's very hush hush. There was something on Bloomberg on Friday, I think, that it's a real disaster and pork prices are like exploding, and the Chinese need to start to import from Europe, from the US. And the problem they have in the US, they don't really want to import it from the US because there are massive tariffs on it. Right, so there's a real, that has been a little bit underreported in the media, because as you know, China and pork, that's basically the story, full stop. And it's downplayed by the government. I tried to find it in the Chinese papers. It's obviously very low key. There's something on Bloomberg I can send out later. Apparently, it's a massive story. And like I said, if we can say, Chinese economy big and other whatever, but food supplies is obviously a very big topic, especially if you talk about pig prices exploding and they're having to pay the tariffs to the US to actually just import what they need, right? So that's just something to watch. It's not, so the Chinese could suddenly be even more keen to do a deal.
Interesting.
Maybe this is why Trump, who knows, that's maybe why Trump goes, screw it. I give him a little bit of heat because he knows how desperate they might actually be. Not because of the rest of the trade, but, there's a few very important points now where they really have a problem. But I don't know if it changes the odds. If you ask me, is there a deal or not, I stick to the view I have for the last 6 months. There will be a deal. It will not be as fully flagged as people may want it to be, and I still think it's a buy the rumor sell the fact. But like you pointed out, this story now is big, at least on the open. So dollar yen and cross yen is just going to get absolutely splattered on the open. Well, it's Wellington Open, it already does, but when the Hong Kong market comes to it, and Tokyo, I think is still out, right? I think they're going. I think they're still a few days off. So
10 days, isn't it?
yeah, so it could be a little bit a hairy situation there. Cross yen, euro yen is now down 123.45.55. So that's down. Where did it close? It closed. The euro yen is down now 100 points from the close on Friday. Yeah, that's about it at the moment.
Interesting. So what do you make of the week? I mean, for me, the FOMC was the biggest kind of thing that I took out, apart from the non-moves on the two big bits of data, and just how easily any kind of talk of green shoots in Europe got absolutely hosed on from one word, transition. So What do you make of that? I mean, we got we've got CPI in the US next Friday, so better ad be good. I'm sure he's seen it already.
Well, to be honest, I mean, what I've been saying all along, what we've been saying on the show, what we've been both blogging about, is I don't understand why people just decide not to listen to what Apple actually says,
I know.
and then claim that the Fed is not listening to the market. And above all, we talked about it offline, that even Alarian, a very big guy from, former PIMCO, now Allianz. I mean, he should know better than starting to talk about the same thing, saying that the Fed is not listening to the market. I mean, let's be honest, maybe the market should start to learn to listen to the Fed. Powell said it all along, from back end of last year. I actually did, if I'm not sure if you've seen it, but I did actually write about it, that I could actually see him say that the weakness in inflation is temporary. Okay, use a different word, transitory. I said temporary. He's done same on the upside. You cannot, as a Federal Reserve, and this is something the market forgets, managing the economy as a Federal Reserve with interest rates and all the other nitty-gritties is an oil tanker. You cannot just flip-flop, right? Let's just say they're now sending a dovish signal and a potential rate cut, and suddenly inflation accelerates. Then they go, oh no, off that, we're now leaning to a hike again. That's no value to the market, right?
Yeah.
You have to, the moment, and I think that is what you were alluding to with the dovish, all the Fed speakers on Friday were the doves or the super doves, right? Yes, the Fed will not close their eyes. If they are wrong that the inflation is not transitory, in 2 months' time or whenever, they might signal that rates may start to go down end of 2019, early 2020. But he's not going to flip, right? So we had the overshoot on the top side due to oil, then oil collapsed. Now actually oil rallied again in the meantime. The labor market seems to be getting tight again. So it will come through the wages eventually, right? So yes, we know inflation seems just not to pop up. We don't know why. I wrote something at the weekend, which my spending inflation goes up every day, every week, every year, right?
Yeah.
Nothing I buy has ever got any cheaper. Whether it's public transport, I get my 5 to 10% hike every year. If I go into the shops, I buy vegetables or whatever, I hardly ever see them getting cheaper. So I'm not sure, and don't get me wrong, I'm not an economist. I have no clue in details. But to me, gut feel tells me that the basket has not evolved to the new way of how people spend their money. The other thing, it just came to my mind when I was writing my little piece today, is, like here in the shops, I'm not sure if it's the same globally, retailers just shrink the package, sell it for the same price.
Yeah.
Right? Of course, bloody inflation. But in theory, it will pop up because you pay actually more for less, but it doesn't show up in CPI. Maybe, I'm not sure, that's maybe, just clutching straws, but these kind of things might be one of the reasons why inflation doesn't show up. It's done in the small on the retail space with shrinking the volume and don't hike prices. And they can't hike price because otherwise people don't buy it. So the transmission that we usually would get into inflation on the spending side, we don't get, right? Because the way shops or retail or maybe the global economy reacts to, we can't pop, we can't hike prices, so we just give a little bit less. And the market is maybe still happy because they don't have to pay more, so they eat up, but they get a little bit less for the same price. Maybe that is I think a combination of the two things is why inflation doesn't show up. And as I said, the way people spend money, you can't tell me that they don't see inflation in their spending, right? So to me, that it happens globally in the developed world, it's just maybe a sign that these baskets are maybe not totally correct anymore. I don't know. but it has to have a reason somewhere. And we can't really always blame China that, we blamed the last 20 years about exporting deflation. I don't think that is the simple answer anymore. But I don't have the answer anyway. Coming back to the topic, I think we have to give Powell 6 to 8 weeks. And if the market is more clever this time than it has been every Fed meeting in the last, few months, they run with him, give him the benefit of the doubt. And okay, if all the inflationary components of any data that we watch continue to surprise on the downside in the next 4, 6, 7, 8 weeks, then we have a case. Then the market has a case to actually say, hey, listen, Fed, where is the transitory? But right now, I just go with it. I continue to believe in this dollar melt up. On Friday, I knew that the number, no matter what number comes out, the dollar will not extend its rally. It was tired. It was already bouncing against the extremes on the Bollinger Band. So I was not surprised when the euro bounced. I actually managed to sell some euros up at 90, which was my first sell area. And I'm going to sell more above 112. There's no reason whatsoever for the dollar to go down. With a small risk of a disappointment on next Friday on the CPI, then there might be a little bit of a hiccup. But other than that, I trust Powell. I trust the Fed. As naive that might sound, I done well with it.
Yeah.
I caught. Why did I call every Fed meeting right? Not because I'm necessarily that good. It's because I just listened and realized Powell is different to Yellen and Bernanke, and that's it. And you know what? I'm grateful to the market that the market was on the other side, because they pushed prices to the extreme ahead of the meetings. Happy days. Keep doing it. It's going to be a good year.
Yeah, so maybe we shouldn't be asking the market to change because
no, just keep
please,
ignoring.
Market, please misunderstanding the Fed. It's fine. Just carry on. So I'm just looking through some topics here. For me, I CPI on Friday is big. Obviously, it's massive. The market reacted very, a lot when those comments came out from Jay Powell. So in a way, and this is how my very simple brain works, if he mentions something like that, that means it's very, very important. And I think it's probably the most important bit of data there is at the moment, just in my mind anyway. But let's see what happens Friday. Well, we've got a few more comments, so we're going to just move on. So we kind of covered, has the market finally twigged as to what the Fed is doing, i.e. being pragmatic, not dovish. I'm not sure it has twigged yet, but it's probably thinking about it after Wednesday. What do you reckon, Beat?
Yeah, to be honest, what I see is just the market somehow, the market just somehow seems not to be willing to buy dollars.
Yeah.
And I don't know why. It's just, I'm not sure if it has something to do in the bigger picture with Trump or which one. It's just the market just suddenly decided, I don't want to buy dollars for various reasons, whatever. I actually don't know. And that's part of my strategy where I say it's going to be a melt up in the dollar, because I'm well aware that the market is not in a mood to buy dollars. Why? I don't know. I don't think that's going to change. The dollar has to grind up, more for maybe another 1% or 2% before at some point the market just has no other choice than to buy dollars. But I think the beginning of this next move is going to be very slow, very overlapping, very hard to be limit long dollars, because you always get these tweaks and the bounce and the dip in the dollar. So it's going to be painful to trade, or painful, let's say, not easy to trade. But I think it's going to be like we've seen when we go to 111.20 in the euro, then we bounce to 112, then we go to 110.80, then we bounce to 11.50. It's going to be one of those. So you can basically, you short dips a percent or let's say 50, 70, 80 points, you buy them back, or at least you buy 3/4 back. keep a quarter short. That's what I always do. I always keep a quarter of everything, where as long as I believe in the trade, and then just sell it back out in the rally. I don't think the dollar is going to explode because the market just is not embracing the dollar for whatever reason that I don't know.
Well, I sort of agree with you, but we did break 97.70 on the DXY, and that had been brewing for some time. And when that happened, it shook everything up a bit because vol was just nothing. And we kind of set, 111.85 broke and all this stuff. And then obviously we failed to stay above that level. We broke lower on dollar index, low to, I think it was the mid Bollinger Band on the dollar index. And we broke above that 111.85 on euro dollar again. So it tried to say, look, come on. And I don't know what happened to those. It could have just been massive stops taken out. But we are now above those levels that we were on the initial break. So, we failed, we reversed the failed again. So it's kind of, I blogged about it last week saying it's spits and starts. So you're kind of, it is definitely 3 steps forward, maybe 1 or 2 steps back at the moment. So we're still we're not in full gear. And as you say, very much overlapping.
97.50, close below the level again on Friday, right? So that's what I mean. It's just not going right now.
Yeah.
Well, I think it will. I think the dollar dip's going to be very shallow, and I think you just got to buy them. What is a shame now is dollar CAD is up to 134.70 with this Trump news. That one was just nicely lining up at 134. And I thought like I got some cheap ones, but that's gone. Luckily, I still
That's
have
a nice level 134.
Yeah, to be honest, it's close 134.20. I had this 35 level, and I just thought, you know what, I still have some longs. I get a bit greedy and wait to see if I can buy some at 90 figure or something, but that's obviously history now, at least for Monday.
Yeah. So there's a couple of bits also. So dollar index melt up or not, key levels to watch. I think you had some amazing levels on your dollar index chart, Beat.
Yeah.
I'll just get my one up. Let's just get this out of the way. I think yeah, down here was quite nice.
Yeah, the mid daily bond in Japan was like 97.35.
Yeah,
I think we briefly got
that's nice there. And this channel, apologies, I'm having some issues on my trend channels, but this channel here was very nice, and you called that, and it's perfectly at the top there, 98.30 area. So this is looking really nice, and obviously it's drifting up. I would say that held that mid Bollinger Band, although it failed to break below and stay below. So that's still intact, that mid Bollinger Band for me on the daily. And obviously it will be really nice if we close above 97.70 by the end of the week. That would be lovely. But yeah, so yeah, I think we are risks are to the upside, and we could definitely get there. I think you like you say, only trade if you want to get long dollar, just trade in legs, and don't do trade in 4 legs at 25%. I know you certainly told me that some time ago, and it's a great strategy because you're gonna get a lot of overlaps, and it won't be a straight flying bird. But that's that. I've got another. I've got we're going to do a league of tables on the least desirable pair, and it used to be euro dollar. I know you're a big fan or not of euro dollar, because it's so complicated, right? There's loads going on. There's so much going on. I think there's a new joint first place in my arbitrary table of least desirable pairs, and dollar yen and cable remain joint first.
Yeah.
Now, the reasons for that is dollar yen is just, it's got just so many things that move it. Like you've got risk plays, you've got dollar plays, you've got 10-year yields, you've got stocks, which are they've written their own rules at the moment, although they have corrected. But up until recently, they write their own rules. And you've got all of that. Good news is bad news until it's good news. You've got the big things like non-farm payroll. It can't be too look. You've got the Goldilocks, and all of that just makes it really difficult to trade. And then you've got cable. One tiny comment on Friday, bang, you're done. Don't have a wide stop.
Yeah.
So that's my. I don't know what your thoughts are on those pairs. Very difficult.
To be honest, I haven't watched sterling in all of 2019. I said goodbye to sterling in the back end of last year because, like we always say on this show, I like to trade when I have an angle or an X. And when sterling started to really react to every tweet that we got from any of the political editors from the UK media, I just realized it's pointless. The next comment is on the points up or down, and I can't judge sterling. We can listen to Carney. It doesn't matter because if you get a hard Brexit, then the Bank of England is out of question, and their potential 1 or 2 hikes is not going to happen. So I haven't traded sterling. I don't even watch sterling at the moment. Yeah, occasionally I do, but it's definitely my most hated pair, and the favorite for the dollar yen. I always used to trade it. I haven't traded it in many weeks, exactly for the reason you just said. I'm a dollar bull, so I struggle to sell it. I'm a risk bear, so I should sell it. So my conclusion was I'm just short cross yen. If I'm right on the dollar and the euro dollar goes down and Aussie goes down and dollar yen just struggles to go up, means yen cross is going to be lower. And if dollar yen, collapses, even better. So cross yen goes down even faster. So I actually try not to muddle my head with dollar longs on the one end and dollar short on the other. So my take is I don't touch dollar yen at all. I'm short cross yen for my short cross yen at the moment is almost like a dollar long, fun enough. Or it acted as a dollar long last week, where the dollar yen they couldn't rally and the dollar was bid across the board. So it's almost
That's right.
So being short cross yen, I always like it. One story is good enough for me to have a position. Right now, I feel with the price action in the dollar versus dollar yen, I actually have 2 reasons to be short cross yen. One is my bearishness on risk. The other one is actually it acts as a dollar right now because of the strange behavior of dollar yen. And if you would put a gun to my head, I would be short dollar yen, despite being bullish dollar. Just by the price action, this 112 area just seems to have closed the door. And you know what? It looks to me as if the BOJ, no matter what they say, it feels as if the BOJ is coming towards the end of what they actually can do. I mean, they already own Japan. What else do you want to buy? Right? They've done it for 20 odd years. I think, what did I see? They owe, I can't remember, it was a ridiculous number out, I think, how many of all the ETFs they own from all the companies in Japan. Right? I mean, it's just, there are big Japanese banks that stopped trading JGBs because BOJ is JGBs. Right? They already own everything. It's like, we already know that Japanese debt is owned by Japan anyway, right? So there's no big foreign ownership anyway, and the BOJ has everything. So I'm not sure if it's the reason that the yen is not weakening anymore on the back of all this jawboning from the BOJ, because actually the market realized, you know what, there's just nothing use, nothing left to buy soon, right? So maybe that's, I'm not sure what it is, but I would agree with you. The dollar yen for me right now is a very, very close second behind sterling. And the rest, euro. To be honest, euro, I like to trade it at the key levels into the rallies. I don't mind. I just mind that, and I think we talked about it before, there's too much talked about the euro dollar, it's too much written about the euro dollar. I understand because it's the biggest part of the XY, so everyone wants to have an opinion about it. But just look at the chart. Where have we gone since mid of last year? Nowhere, really, give or take. Nowhere, right? While we had swings in many of the yen pairs, in the Aussie, in dollar CAD. So there's really, just so many other interesting things going on that, as I said, if euro rallies back to 112 figure 40, I might be limit short again. Euro dollar was the only dollar that I was limit long into the Fed because better levels just suited. We tested this 160 downtrend. I mean, it was just a gift to be short. But now I'm already 25% short right now. I actually saw Friday at 90s, I'm a little bit more short again, but it's just, like I said, it's a portfolio approach. I sell rallies, I buy dips. Well, let's say if I'm bearish, I'm short, and I'm never long, I'm just short more or less. So I use the market just, if I'm short euro and it dips, I buy some back. Rallies, I sell it back out. If it keeps on selling off, okay, I'm still short some, but I'm just not trying to overcomplicate it. There is still, it's now early May, it's range trading. All it is, we can say whatever we want. Nothing has really gone anywhere in 2019 so far. So I still stick to my bearish view on risk. I still think that will win the day eventually. But in the meantime, patience.
Let's copy Jay Powell and use a bit of patience for ourselves in our trading.
Yeah. Well, to be honest, I think I wasn't always a patient trader in my earlier days. Far from it. I got a lot better over the years, and I would say in the last 1 or 2 years, I got very good at it. Where I just, and I think part of it is probably linked to, and I think retail should really take note of that, is you always have to wonder when you use your own money whether something is worth it or not.
Yeah.
And that's really my judgment. When I see something, I really try to analyze how big is that view, how much want I spend on that view, and if you go like, I don't know, then maybe there's not a trade. Or the level isn't right or whatever. So I'm become a little bit, and I have to admit, since I've done this more the portfolio approach for using 2, 3, 4 different legs going into a position, it's almost like trading gamma, just I don't have an option. That's how I actually trade. I do gamma trading without an option. And that has actually worked, especially in a range market, very well. And the only reason why I could do a little bit better if I sometimes buy everything back, but I can't. There is the macro brain. So I always keep some risk that is aimed at a bigger picture. And, as long as we don't break out, that's probably a waste of time, but that's just how I trade. And I figured out, it actually works quite well.
Good stuff. So I had some fun with fibs the other day. This is one of my least favorite pairs to trade, but just sometimes I just like to look at charts. So I'm just going to take you through this is what I do basically. I like to have fun, and here we go. I know this doesn't really count because it's an Asian flash crash, but here we go. It does make some sense. If I just draw a fib from there to there, you've got a nice 38%, which is a little level I've got, 109.70. So there's that, which I really encourage you to do if you're retail. Do that and then try another fib. And let's just see. I'll tell you what I'm talking about. All the way from up here, all the way to down there. Look, it's okay, 109.96, so 50% from there to there. If you can get two types of fibs on two different highs and lows, and it comes around near to the same level, and that corresponds with a double bottom on the daily here and all the way back here, then that's a little cheeky level for me. 109.70. Don't know what your thoughts are on that. You're a big fib man. We all know that.
To be honest, if you switch your chart, let me see, to the 2-year, because what I don't do is I'm not using the flash crash low.
Yeah.
Flash crash low for me doesn't exist. So either when I use just a smaller print, I use the first real market after the low.
This one.
Yeah.
Yeah.
Which is just, everyone has his own little, but what I did recently is if you go a bit further back, you have a low at 104.65 that is actually coming from March of 2018. If you
I can't change my years on my fib at the moment, so apologies that. But it's way back here, isn't it?
Yeah, because there's a little bit of lower low there, and if you take that as the entire move, you have basically 110.75 and 109.55 as the fibs, and at least 104.65 is a low that has traded on 4 different days. That's a real low, right?
Yeah.
So yeah, when your machine works, just switch it to 2 years.
I'll give that a go. Brilliant.
And the problem is, I have ignored the flash crash low in all of my charts, Aussie yen at the end, because reality is it never happened. It's not. Exactly. It just didn't trade there. And even though with that low, your fibs there at 109, what's that, 71, is almost looking better than on mine, but it's. I just try to ignore wrong prices, and the flash crash for me was just wrong. Yeah. But it comes out at the same level.
I like this level. I like it because it's on the daily rather than it's a fib. Yeah. It's nice to have a bit of a fib on it as well. Yeah, but I'm very.
When it's at 58, 55, or 70 at the end, is no real big difference anymore.
Yeah, exactly. But that's fantastic. And so my favourite dollar to buy is Aussie dollar to sell, and I think you've probably got a rate cut coming this week. I think if they don't, the market's just going to throw their toys out of the pram. Australia's got a lot of problems. I've been reading a lot of reports. China's capacity for iron and loads of commodities isn't what it was. Australia hasn't had a recession for over 20 years. They bypassed 2008, so they're due for one. And housing's a massive problem. CPI, we all know about. That's recent. That's going south, and they're all the kind of indicators I'm looking at do not point north. Yeah. So yeah, I just see them cutting, and it's a good place to buy your dollars, I think. I don't know what your thoughts on that, Beat.
Yeah, to be honest, the RBA will most likely cut, and I always had this. Back last year, I had 68, the low 68 handle as a target. We never really got there. 70 was this sort of sticky area, but I think now it has all the chance to actually do that. And I think I sent a monthly chart out a week ago or two, which my overall target has suddenly become 62. That's a bit, so just to show a level around. No, to be honest, let's say especially if this progress around the trade talks really stall, then the problems are just back on. And, we definitely should get one cut. There's still potential two in the pipeline. But also the only thing I struggle now is this move overnight with Aussie being already deep in the mid 69s, it's a bit tough to get long. I'm not, long dollars, short
Yeah.
Aussie. I have a bit of Aussie yen short, but I missed the Aussie dollar. I was a bit lazy on last few days on this one. And so my big one this year was dollar CAD, but what confuses me there a little bit is that the Bank of Canada meeting, they did blink, but when Powell spoke a few days later, they actually got beat, right? So I'm not sure whether he tries a different market psychology to Draghi, where they just kind of talk it up, not to influence rates, but to influence confidence. So I'm not sure whether this is what they really believe. Of course, the Canadians, the only thing they have in favor is that the US economy is still doing quite well, and they're still very correlated with the US economy. So maybe that's where his optimism is coming from, that the weakness could be transitory. But the housing market in Canada looks about as crap as the Aussie did when it started to roll over. And so I will always be long dollar CAD. For me, it's actually right now is the bigger trade than the short Aussie is. But I have to admit, I closed my Aussie shorts quite well at the time before we bounced, and the Aussie started to feel like it bottoms out. So the whole shift on the Aussie data, I was a bit slow to react. So I didn't get really, but I almost kind of ignored the Aussie as the pair that starts to bottom out without rallying much, but just kind of losing interest. And now it suddenly seems, the interest seems to be back. So I have to see what I do with that.
Fantastic. I think that's it for the show today. And, it's been absolutely great to have you on, Beat. And as ever, we put the world to rights, and often we have, or certainly I have more questions, which is all good. But watch the risk tonight, because we're all gapping. Risk is gapping lower because of the trade talks tweet from Trump. So just be careful. And just from my personal experience, and I know you agree, don't be selling any gaps. Wait for the gaps to fill. That requires patience. And that could take 1 session, 2 sessions, who knows? But in my experience, gaps generally do get filled at some point. So just be careful. If you're going to sell it, if you're going to hit the market, just sell a small amount and put it through legs.
Agreed.
But apart from that, finally, we're going to talk about your amazing commentary, Beat. It's sterling. I know you've got some very, very important people who see the value in it, and just tell us a little bit more about what you do, please.
Yeah. So what I do early morning, I do all the 4-hourly and daily charts, the 4-hourly for the day traders, the daily for the macro guys. With all, on each individual pair, I'm gonna have my 2 cents on it, my view, what's driving it, what my view is, what my position is. I sort of send a piece out, my 2 cents, where I put like all my thoughts in on where my focus is. As you pointed out, I was lucky enough to have now some corporate subscriptions where I have some banks signing up for it. So at least it shows you've been so kind to always mention it in a very nice way. It is good. I know I blow my own trumpet, but I think for the pros, it helps to actually, because my levels usually are not too bad. For those learning, it's a tutorial piece. You really start to learn what we watch on the professional side, how much you have to watch to actually build a view, understand what's happening. And then I think, I've seen it with some of my students. It's very easy or quick to learn about carry, about correlation, about this and that, but actually build a view, a conviction view to be bearish or bullish, be short or be long, not so easy. And I think you do need, or most those that have the product appreciate that they need some help from a professional. And I think that is what it is for, especially for the retail side. So if anyone is interested to have a chat, ping me or Patrick, and we can have a talk about it.
That's fantastic. Thanks, Pete. Appreciate that. Well, look, that's it for the show. Just we're going to we both blog a lot, and you know, it's going to be a very interesting week. Keep an eye on the Aussie rates, but you know, see if there's any more credence to this Trump tweet over, you know, in Asia tonight. But apart from that, just take it easy. It's going to be a long year. There's lots of stuff going to be happening, and you know, a week is a long time in trading. So just take it easy, and easy does it. Thank you very much, B. You take care. See you next week.
See you in a week's time.